welcome to the deep dive. You've likely been following the news, and we know this renewed trade friction between the U.S. and China has been very much on everyone's radar.
Absolutely.
You sent us a really comprehensive set of materials, news articles, economic reports, and we spent time distilling it all down for you.
Exactly. And the catalyst, as everyone's aware, was President Trump's tariff increases back in April.
Right.
So in this deep dive, we really want to clarify first the immediate economic repercussions.
Okay.
Then look at the broader geopolitical shifts happening, and crucially, address that big question. Based on what we've examined, could this, actually escalate towards a major global conflict?
Like World War III, yeah, that's been floated.
It has. And we'll also touch on how this might affect smaller economies, maybe using Bhutan as an example.
Okay, sounds good. So let's maybe start with the initial moves. What actually happened in April?
Well, the U.S. moved pretty quickly, imposing a really substantial 145% tariff on a whole range of goods coming in from China.
145%? Wow.
Yeah. And unsurprisingly, perhaps, China responded almost immediately. They hit back with their own significant tariff, 125%, but on select American products.
So a very rapid tit-for-tat escalation.
It was. And what's quite interesting, I think, is the strategic nature of those initial salvos.
How so?
Well, while the U.S. tariffs were quite broad, China's retaliation specifically targeted U.S. agriculture and aerospace.
Ah, okay. Key sectors.
Exactly. It suggests a pretty calculated approach, doesn't it? Aiming at sectors with significant U.S. export power and maybe sectors with influential domestic lobbies, too.
Right, hitting where it might hurt politically as well as economically.
Precisely.
And the immediate economic fallout. The sources mentioned some pretty staggering numbers.
They did. I mean, one figure that really jumps out from the reports is that $3.8 trillion drop in market value.
For U.S. tech companies, right?
Yes, for U.S. tech, just since this latest round kicked off, it's an eye-opening number.
It really is. Does that just show how interconnected everything is, even if tech wasn't the main target initially?
I think it does, powerfully. This kind of rapid decline, even hitting companies maybe not directly targeted by all the tariffs, it just illustrates how deeply woven together global supply chains are.
And investor confidence, too, I suppose.
And investor confidence, absolutely. It crosses borders instantly. This isn't just about, direct trade volumes anymore.
It's about the fear of disruption.
Exactly, the anticipation of widespread disruption. And we're also seeing significant headwinds for the U.S. agricultural sector.
Because they were targeted.
They were. The reports show a sharp decrease in farm exports heading to China. And there's that projected $49 billion trade deficit for the U.S. in fiscal 2025.
It really underscores the real economic pressure building up.
It does.
Right. So, okay, moving beyond these immediate economic hits, what about the broader geopolitical shifts? What are the sources telling us there?
Well, this brings up a really crucial aspect of, international relations right now. China has issued some pretty clear warnings.
Warnings to whom?
To other nations, essentially saying, be careful about entering trade agreements with the U.S. if those deals might undermine China's own interests.
So drawing lines in the sand geopolitically.
You could say that. It signals a really firm opposition to what China sees as unilateral U.S. actions.
And they're positioning themselves differently.
Yes, they're strongly advocating for multilateral cooperation. Lots of countries working together on solutions as the better path forward. They're kind of framing themselves as a defender of maybe free trade principles against what they call protectionism.
Interesting positioning. Okay, this leads us, I think, to that really big question, the one that feels a bit like Cold War echoes or something.
Mm-hmm.
Does all this tariff fighting and geopolitical maneuvering actually put us on a path towards, a large-scale global conflict, World War III? What do the sources indicate?
It's the elephant in the room, isn't it? Look, the prevailing view, certainly in the materials we reviewed, is that a full-scale military conflict of that kind is, highly improbable, at least right now.
Highly improbable. Okay, why? What are the main reasons?
Several key factors come up repeatedly. The first, and maybe the most fundamental, is just the sheer economic interdependence that still exists.
Even with the tariffs?
Even with the tariffs. I mean, the U.S. and Chinese economies remain deeply, deeply linked. A major war would be absolutely devastating economically for both sides.
And the rest of the world?
And it would trigger a global recession that, frankly, neither side wants. It's almost mutually assured economic destruction.
Right. It's hard to decouple completely.
Well,
So that's one major break on escalation. What else?
Well, another point is that despite all the tough talk and, the actions we're seeing, diplomatic channels are still open. They haven't been completely shut down.
Okay, that's important.
Yeah, the reports highlight that both nations are still using platforms like the World Trade Organization, the G20 meetings, even direct bilateral talks to manage these disputes.
So they're still talking, even if it's tense.
Exactly. And that ongoing dialogue, however strained it might be, provides a really critical mechanism, a safety valve maybe, for preventing further escalation.
Okay, so interdependence, diplomacy.
Hmm.
Does this suggest the fight is more about something else, not necessarily preparing for war?
I think that's a fair reading. Much of this tension can be interpreted more as strategic posturing. It's like a high-stakes game of economic chess.
Chess, okay. What are they playing for?
Leverage in trade negotiations, certainly, but also crucially dominance in key technologies for the future. Military conflict is seen as the absolute last resort.
Because the cost is just too high.
The global consequences would be catastrophic, and both powers seem acutely aware of that. So think of these tariffs not just as trade barriers, but maybe as strategic moves in a longer game.
A long-term competition for global influence may be fought economically and technologically.
That seems to be the assessment, yes. The battleground looks more like cyberspace, markets, and labs than, traditional military fronts.
Okay, that's a really crucial distinction. But the sources did mention other potential flashpoints, didn't they? Places where things could get hotter.
They did. If we were to see further escalation, the analysis suggests it's more likely to pop up in areas like, say, cyber attacks, or maybe economic sanctions that go beyond just tariffs, or in those well-known regional hotspots, the South China Sea, or the situation around Taiwan.
But even there, maybe not direct conflict.
Well, the tendency historically, even in those tense situations, is for major powers to operate more through proxy disputes rather than direct military confrontation between themselves.
Got it. And what about the rest of the world? Do other countries have a say or influence?
Absolutely. That's another key factor. The vast majority of nations think about Europe, the Asian countries, the UN structure itself. They all have a massive vested interest in keeping the peace and stability between the US and China.
Nobody wants that fight.
Nobody. So this collective multilateral pressure can act as a pretty substantial brake, a force for de-escalation when tensions really spike.
Okay, so pulling that together, the overall picture from these sources is intense economic competition, a lot of strategic maneuvering, but not an imminent slide into World War III.
That seems to be the consensus, yes. A high-stakes game of economic chess is a good way to put it.
Okay, that's a key insight. Now let's shift focus a bit. We wanted to understand how these huge global dynamics might filter down and affect smaller economies. We asked you to look at Bhutan specifically.
Yes.
How might this U.S.-China trade war impact a country like Bhutan, which isn't really a direct player in this?
Well, it really highlights how interconnected the global economic system is, doesn't it? Even if Bhutan's direct trade with the U.S. and China is relatively limited.
Which it is, I assume.
It is, but it remains vulnerable to the indirect consequences. So, for example, a general global economic slowdown, if this trade war triggers one,
Which it could.
could easily lead to reduced demand in the big economies. And that could then circle back and negatively impact Bhutan's key sectors. Think about tourism, for instance,
Fewer international tourists, maybe.
potentially, or impacts on its hydropower exports, which go mainly to India. If India's economy slows because of global trends, that impacts Bhutan.
So it's a ripple effect. A downturn far away creates waves that eventually reach Bhutan's shore, so to speak.
Exactly. Then there's the whole issue of currency fluctuations.
Ah, okay. How does that work?
Well, this trade war can definitely influence the strength of major currencies, like the US dollar and the Chinese yuan. Now, Bhutan's currency, the Ngultram, is pegged to the Indian rupee.
Meaning its value follows the rupee closely.
Right. So any volatility in the USD, perhaps making the rupee weaker against the dollar due to broader global instability caused by the trade war.
That would make imports more expensive for Bhutan.
If those imports are priced in dollars, yes, Bhutanese imports would effectively become more costly.
I see. So even though their currency is pegged to the rupee, shifts driven by the dollar elsewhere can still bite.
They can, and related to that is just the general cost of goods globally.
That's
Well, if global shipping costs go up because of new trade barriers or general uncertainty, or if the prices of essential imports like fuel or electronics or machinery rise globally,
Bhutan has to import those things.
Exactly. So Bhutan would likely see its import costs increase, even if it's not directly trading with the nations actually imposing the tariffs. It gets passed down the chain.
So it really sounds like a lot of potential negative spillover effects.
Yeah.
Higher cost, potentially lower demand for their exports.
Those are certainly the main risks highlighted.
But I think the sources mentioned, could there be any potential upsides? Any sort of indirect opportunities for a smaller economy like Bhutan in all this mess?
Interestingly, yes, the analysis does suggest some possibilities, though perhaps more indirect.
Like what?
Well, think about supply chains. If companies start actively looking to diversify their manufacturing or sourcing away from China, to mitigate the impact of these
The
tariffs.
China plus one strategy people talk about.
Exactly. Countries like India could potentially benefit from that shift, and if India benefits,
That might create knock-on opportunities for Bhutan.
it could. Perhaps new avenues for Bhutan to increase its exports to the Indian market, or maybe even attract some niche investment from companies looking for alternative production locations within the region, perhaps leveraging that India connection.
Huh. So while there are definitely challenges from the instability, there could be some unexpected, maybe small advantages if global trade patterns shift significantly.
Precisely. It just underscores how complex and interconnected international trade really is. Seemingly distant events can have quite tangible consequences, both negative and occasionally positive, even if they're indirect.
Okay, so let's try and summarize our deep dive then. It seems the renewed U.S.-China trade war has definitely brought significant tariffs, major economic repercussions. We saw that $3.8 trillion tech figure.
Mm-hmm.
But a full-scale military conflict, like a World War III scenario, looks unlikely right now.
Based on the sources, yes. Mainly due to that deep economic linkage, the diplomatic channel still being open, and, well, global pressure for peace.
Right. And for smaller economies, like Bhutan, the impact is mostly indirect.
Yes, through things like a potential global slowdown affecting their exports or tourism, currency shifts impacting import costs, and general price changes.
But with a potential small upside if supply chains shift regionally.
There's that possibility too, yes. The whole situation really does illustrate just how interwoven our global economic and geopolitical landscape is.
It certainly does. And, that brings us to our final thought for you, the listener. Considering this intricate web of connections we've talked about just with this trade war,
Hmm.
what are some other maybe unexpected areas where you think these kinds of global economic tensions might show up, might manifest in the coming years?
That's a great question to ponder.
It definitely gives you something to think about. Thanks for joining us for this deep dive. We really encourage you to keep exploring these complex issues and thinking critically about the forces shaping our world.